Let us see the next question. A trader whose current sales are in the region of rupees 10 lakhs per annum and an average collection period of 45 days wants to pursue a more liberal policy to improve sales. A study made by the management consultant reveals the following information. Credit policy A, B, two policies have been given. Increase in the collection period is given. In the first case, it is 15 days. So from 45 days, it will increase to 60 days. It will increase by 30 days. So from 45 days, it will increase to 75 days. Increase in the sales is given 50,000 in the first case, 80,000 in the second case. Percentage of default anticipated. Default stands for bad debts, so the percentage of the bad debts have been given. 2% in the first case and 3% in the next case. Then we have been given that the selling price per unit is rupees 5. Average cost per unit is rupees 4 and variable cost per unit are rupees 3. The current bad debts loss is 1% and the required rate of return on additional investment is 20%. Assume 360 days in a year. The question says that which of the above policy would you recommend for the adoption? So the question says that what is your suggestion? Whether the company should continue with the existing credit period of 45 days or it should offer the credit period of 60 days to customer or it should offer the credit period of 75 days to customer. That is a question. I request all of you to go through the question, please. I request all of you not to write anything. Just let us have understanding of the information of the question. This is only for understanding purpose. Average collection period is given to us right now 45 days. In option number 1 it is 60 days. 45 plus 15. In option number 2 it is 75 days. That is 45 plus 30. Information is provided to us. What is the sales of the company? Right now sales of the company is 10 lakhs. In option number 1 it would be 10 lakhs plus 50,000. That comes to 10 lakh 50,000. In option number 2 it would be 10 lakhs plus 80,000. That comes to 10 lakh 80,000. Okay. That is what they have provided. Then selling price per unit is given. It is 5. Average cost per unit or total cost per unit is given as 4. Then variable cost per unit is given as 3. Percentage of the bad debts is given. Right now it is 1%, then 2%, and then 3%. Like that information is given. The question provides additionally that considering 1 year is equal to 360 days, you are required to decide what is the optimum credit period that we should offer to the customers. That is a question. Now friends, I am giving one explanation to you. That is, I am informing to you like this. Why is it like that? I'll explain that to you after some time. So the information which I am giving you is this, that for the purpose of decision making, there are 3 methods which they have recommended. or there are three methods which they have provided to us for decision making. Don't write anything, let us understand only. The first method is given a name as total profit or loss approach. The second method is given a name as incremental approach. And the third method is given a name as the total relevant cost approach. That is the way, say for the purpose of decision making, there are three methods. The first method is given a name as the total profit or loss approach. Second method is given a name as the incremental approach. And the third method is given a name as the total relevant cost approach. Let us have understanding that what kind of information is required for the purpose of decision making. Dear students, it may happen that, listen carefully, it may happen that we have provided specifically that say this is the method which is required to be followed. If at all we have been provided with such kind of express information that say this is the method which you are supposed to follow, then in that case we don't have a choice to select any of the method. We have to follow that method for the purpose of decision making. That is the first thing. Second thing, if at all we have not been provided with any such information that which method is supposed to be followed, then taking into account the information given to us in the question, we have to select one of the possible methods. What I want to tell you is that say every time all three methods may not be possible. Information may be provided such in which either one of the three method is possible, or two of the three method is possible, or all the three methods may be possible. So you have to see that say what kind of information is given. Whatever the information is given, accordingly you are required to pick one of the three methods. In order to apply total profit or loss approach, you require three information. One, you require existing sales information. Second, you require new sales information. And third, you require cost information. These three information are required. Dear students, the existing sales and the new sales may be same in some question. Existing sales and new sales may be same in a few questions. See, in this question it is not like that. We can see that the new sales is different than the existing sales. But sometimes it may happen like this. You may have an apparent question that sir, if at all both of them are same, then what is the point of the decision making? You don't worry friends, we are going to understand that later on, not right now. I am just informing to you right now. Okay. Now in respect of the cost, again we require one of the two information. Either variable cost information is required or total cost information is required. If one of the two information is available with us, we can apply total profit or loss approach. As far as the second method is concerned, second method can be applied in all questions. Yes, in any of the question, we can apply this method. In all the questions, it is possible to apply incremental approach for the decision making. And as far as the third method is concerned, third method is given a name as the total relevant cost approach. It can be applied subject to fulfillment of the condition, that existing sales and new sales are same. So if at all there is a situation wherein existing sales and new sales are same, we can apply so the total relevant cost approach, otherwise it cannot be applied. Dear students, I just repeat that I am only telling you like this. I cannot explain at this point of time all these things. Why I cannot explain? Because I need to do a few questions and then I will be able to give explanation to you. So right now only say information stage is going on. Definitely later on say we will be able to understand why the conditions are like this. Do not write anything. I want you to write in the chat box as far as this question is concerned, which we are discussing right now. This question can be solved by which method or methods? Please write answer in the chat box. Dear students, this question can be solved either by using the first method or by using the second method. One of the two methods can be applied. We cannot apply the third method. Why? The reason behind that is very simple. For the third method, the condition is that so the existing sales and the new sales should be same, and that condition is not satisfied over here. Second method can be applied in all the questions. First method can be applied if we have existing sales which we have 10 lakhs. New sales that we have 10 lakh 50,000, 10 lakh 80,000. We require the cost again which we have, it is 3 rupees, it is 4 rupees. Please write an answer. Right answer. Dear students, just I would like to clarify that say these notes are only for understanding purpose and these notes are not forming part of the answer. It is only to explain you. I am dictating these notes to you. In examination, you just have to write answer. Note, write down first point. In this question, we have to decide whether company should continue with existing credit period of 45 days or it should implement new credit period. Second point, for the purpose of decision making, there are following methods. In that, write down A, total profit or loss approach. B, incremental approach. C, total relevant cost approach. Third point, we may be provided expressly that which method is supposed to be followed. Full stop. If any such clarification is not made, comma, in that case, we have to follow one of the possible methods. Full stop. Fourth point, if more than one method is possible, comma, then following any method will always have same decision. Next point, in order to adopt method number 1, comma, total profit or loss approach, comma, it is necessary that we have information about A, existing sales, B, new sales, C, cost. With paragraph write down, existing sales and new sales may be same. Full stop. In respect of cost, we need information about variable or total cost. 6 point. Incremental approach can be adopted in any question. 7. Total relevant cost approach can be adopted if existing and new sales are same. So let us write down answer now. Method number 1, total profit or loss approach. I request all of you to pay attention now. Don't write anything. Let me only give explanation to you. The first method is adopting the total profit or loss approach for the decision making. Dear students, as far as the first method is concerned, in that we have to do answer in 3 steps. Which are those three steps? I am telling that to you. Why? I am explaining that to you. So let me just say explain to you. You don't have to write anything. In step number 1, we'll compute the total fixed cost. In step number 2, we'll compute the variable cost to sales ratio. And in step number 3, we'll compute the total profit or loss for each of the credit period. Why do we do answer like this? I just explained that to you in 2 minutes of time. But before we proceed further, I request all of you to tell me in the chat box that what must be the total fixed cost of the company. I request you to tell me answer in the chat box that what must be the total fixed cost of the company. Let us have understanding that say how to calculate the total fixed cost. Dear students, the question is providing the information that sales is 10 lakhs. Selling price is 5. So kindly use your calculator. We can say that the sales 10 lakhs divided by selling price per unit is 5. So basically we are producing and selling 2 lakh number of units. The question is providing that the total cost per unit is 4. Variable cost is 3. So what happens at say total cost per unit is 4. Variable cost per unit is 3. So the total is 1 per unit. Multiplying with what? 2 lakh number of units. That is the way we can compute that. So the total fixed cost is rupees 2 lakhs. Like this you can calculate. Or otherwise, what you can do? 2 lakh number of units into 4. That comes to 8 lakh units. 8 lakh rupees. Again 2 lakh number of units into 3. That comes to 6 lakh rupees. So the difference between both of them is 2 lakhs. That is the way we can compute the total fixed cost 2 lakhs. Why do we compute this? I just explained that to you in 2 minutes of time. Now the second step, as I told you, is variable cost to sales ratio. I request you to write answer in the chat box that what must be the variable cost to sales ratio in this example. Friends, over here the answer is very simple. 3 rupees is the variable cost and 5 rupees is the selling price. So 3 upon 5 into 100. So the answer is 60 percentage. So variable cost to sales ratio is 60 percentage. So friends, I have explained to you that the amount of the total fixed cost is 2 lakhs. I have explained to you variable cost to sales ratio is 60 percentage. Do not write anything, let me explain you. Now the turn comes of the total profit or loss calculation. What we will do for 45 days, for 60 days and for 75 days. For all the 3 credit period, we'll compute the profit or loss. Sales of the company, right now it is 10 lakhs. In proposal 1 it is 10 lakh 50,000. In proposal 2 it is 10 lakh 80,000. Variable cost is 60% of the revenue. So this is 6 lakhs. This is 6 lakh 30,000. And this is 6 lakhs 48,000. See, what I want to tell you friends is that say we have computed variable cost to sales ratio over here because of the reason that we know that the sales value is changing. With the change in the revenue, so there will be a change in the variable cost also. What is the proportion in which the variable cost is going to change? That we will be able to know once we compute the variable cost to sales ratio. That is the reason in step number 2, we compute the variable cost to sales ratio. Total fixed cost, it is 2 lakhs. It is going to remain same 2 lakhs. It is going to remain same 2 lakhs. What I want to tell you is that the total fixed cost is going to remain same 2 lakhs irrespective of the change in the activity level. That is the reason say we compute so the total fixed cost of 2 lakhs. And so on, we are going to make further calculation. I want to first of all give explanation to you that say in step number 1, why do we compute the total fixed cost? Because I know that say when the sales value is going to change, with that the total fixed cost is not going to change. That is the reason in the first step we compute the total fixed cost. In step number 2, I am making the calculation of the variable cost to sales ratio because I know that say when the sales value is going to change, at that time so the total variable cost is also going to change. But in what proportion? So that variable cost to sales ratio will guide us. In third step, so we are going to do the profit or loss. In that, all these things are going to be helpful to us. So method number 1, total profit or loss. In that, say I want you to write like this. Write down answer along with me. Usually, in this method, comma, we will adopt following steps. In that, write down step number 1, total fixed cost. Second, variable cost to sales ratio. Third, total profit or loss. For each credit period. With paragraph write down, credit period having maximum profit will be selected. Full stop. Now we are writing answer. Step number 1, calculation of total fixed cost. In that write down, working note number 1, calculation of sales units. In bracket I am writing presently. Sales upon selling price per unit. Sales value is 10 lakhs and selling price per unit is 5 rupees. So the answer is 2 lakh number of units. Working note number 2, calculation of total fixed cost. In that write down, total cost is equal to total variable cost plus total fixed cost. What is the total cost? In that we understand it is 4 into 2 lakhs. What is total variable cost? It is 3 into 2 lakhs. What is the total fixed cost? That is to be calculated. So it is 8 lakhs minus 6 lakhs. That comes to 2 lakhs. That is the way the total fixed cost is calculated. Step number 2, variable cost to sales ratio. Variable cost per unit divided by selling price per unit. So 3 divided by 5 into 100. That comes to 60%. That is variable cost to sales ratio. Step number 3, calculation of profit or loss for each credit period. Full stop. So the table will be prepared like this. Column number 1, particulars. Opposite to that, we will have ACP, average collection period. 45 days, 60 days and 75 days. 60 is 45 plus 15 and 75 is 45 plus 30. This is the way we'll prepare a table. Now friends, for 45 days, I'll give you a detailed explanation. Then for 60 days, I would like you to make the calculation first and then I will do. And same is the case with the 45. So I request you to properly understand the 45 days working. First of all, we will mention the sales. The existing credit period of 45 days has sales of 10 lakhs. It has a variable cost 10 lakhs into 0.6, that comes to 6 lakhs. Then total fixed cost, it is an amount of 2 lakhs. So from the revenue of 10 lakhs, we will deduct the variable cost of 6 lakhs and total fixed cost of 2 lakhs. Now we will deduct the carrying cost. I request all of you to pay attention first of all. Carrying cost is calculated like as total variable cost plus total fixed cost divided by 360 days into average collection period into cost of capital. That is the way we compute the carrying cost. The amount of the variable cost is 6 lakhs. Amount of the fixed cost is 2 lakhs divided by 360 into credit period is 45 days into 20%. So we'll have the calculation of the carrying cost like this. So it is calculated as 6 lakhs plus 2 lakhs. That comes to 8 lakhs, that is the numerator, into 45 days into 20% divided by 360. So the answer would be 20,000. So we'll have the carrying cost of 20,000. Then we'll have one more expenses. So that is what we understand is the bed debts. As far as the bed debts is concerned, it has been provided to us in the question that right now 1% of the customer default. So it would be 10 lakhs into 1%. That comes to an amount of 10,000. So what we will do, friends, we'll make the calculation of the profit or loss like this. All the expenses will be deducted from the revenue to compute the profit or loss. So sales is an amount of 10 lakhs minus variable cost is 6 lakhs minus fixed cost is 2 lakhs minus carrying cost is 20,000 minus bed debts is 10,000. So there is a profit of an amount of 1,70,000. Dear students, over here we understand that there is a profit of 1,70,000 rupees for 45 days credit period. We'll make the similar calculation for 60 days and 75 days. But before we do that calculation, rather I want you to do that calculation, I'm giving explanation of one point. Many a times the students are having a question to me that, sir, deducting the variable cost from revenue is something which is which is acceptable. Deducting the fixed cost is also acceptable. Deducting the bed debts is also acceptable. However, sir, when we are deducting the carrying cost, is not something which is digestible to me, because the kind of understanding that we have of the carrying cost is it is an opportunity cost. So why do we deduct it as a cost? So giving explanation for that point. Now friends, I agree that say the way we have the variable cost or the fixed cost as out of pocket cost, similarly the carrying cost is not an out of pocket cost. So we can say something like this: if at all we do not deduct the carrying cost, then the amount of the profit would be 1,90,000. It is 1,70,000 plus 20,000. So we can understand something like this: if at all we do not sell goods to this customer and we invest the funds say somewhere else, And if at all we do not do business and we invest the fund somewhere else, what we can earn? We can earn 20,000. And by doing business, what we earn is 1,90,000. You make separate comparison and then you make a selection. I repeat that. We understand that say if at all we do not do business and we invest the fund somewhere else, we can earn 20,000. But by invest, that is say by doing business, we earn 190. So 190 is more than 20. So we understand that say we should sell goods to this customer. So instead of making a separate comparison like this, what we are doing, we are deducting this 20,000 from here. After deducting this 20,000, the resultant value may be positive, the resultant value may be negative. If it is positive, it means that say we should sell goods to this customer. And if it is negative, we'll advise that say we should not sell goods to this customer. That is the way say simply we are required to say that is say we take the decision. So we deduct the carrying cost and we see that say do we have a profit? Means my entire opportunity cost is recovered and then I receive something more. And if at all the answer is negative, then in that case my opportunity cost is not recovered and I should do something else. I request you to write answer for 45 days and then you write answer in the chat box that what would be the profit or loss for 60 days time period. Please write answer in the chat box. In case of 60 days, let us understand. Sales of the company is 10,50,000. That is 10 lakhs plus 50,000. Variable cost is 6,30,000. That is 10.5 lakhs into 60%. Total fixed cost is going to remain same. That is 2 lakhs. Total fixed cost is not going to change. Carrying cost, in that we understand it is variable cost, that is 6,30,000. Fixed cost 2 lakhs into 75 days divided by, into 60 days. Divided by 360 days into cost of capital, which is 20%. That is the way the carrying cost is found. So variable cost 6,30,000 plus fixed cost 2 lakhs, 8,30,000 into 60 into 0.20 divided by 360. That comes to 27,667. Then we have been provided that the loss on account of bad debts is 2%. So 10,50,000 into 2%. That comes to 21,000. All the expenses will be deducted from the revenue to find the profit or loss. The sales of the company 10,50,000 minus variable cost is 6,30,000 minus fixed cost is 2 lakhs minus 27667 minus 21,000. That comes to 1,71,333. Please write an answer for the 60 days and I request you to make the calculation of the answer for 75 days. And again put your answer in the chat box. So let us understand how to do answer for 75 days. Sales will be 10 lakhs plus 80,000 It is 10 lakh 80,000. Then 10 lakh 80,000 into 0.6, that is 6 lakhs 48,000. Total fixed cost no change, 2 lakhs. Carrying cost, in that say the 6 lakhs 48,000 plus 2 lakhs once again, divided by 360 into 75 days into 20%. That is how we will make the calculation of the carrying cost. So over here, 6 lakhs 48,000 plus 2 lakhs, 8 lakh 48,000 into 75 divided by 360 into 0.20. That comes to 35,333. So the next is the loss on account of bad debts. 10 lakh 80,000 into 3%. So 10 lakh 80,000 into 3%. 32,400. So let us have understanding how to calculate the answer. 10 lakh 80,000 minus 6 lakhs 48,000 minus 2 lakhs minus 35,333 minus 32,400, 164,267. So what will happen? There is say a profit in all the cases. However, the option which is having say the maximum profit, that option would be selected. That is 60 days in this example. So we'll recommend the company that say you should offer credit period of 60 days to the customers. So this is the point at which we understand that say we are able to take the decision that the company should offer credit period of the 60 days to the customer. So write down one line answer, decision. "60 days credit should be offered to customers." That is what we understand. Now, friends, since it is the initial question, so I would like to do it with the alternative method also. I request all of you to write down heading. Method number 2. In the breakdown, incremental approach. So let us understand in method number 2 how we will do answer. I just give you a basic background say for doing this answer. In this case, what will happen? We will make a comparison of the new over the existing. New over the existing means we are offering the credit period of the 60 days over 45 days. We are offering the credit period of 75 days over 45 days. See, you understand that word which they have used is incremental, differential, additional is one and the same. So what happens at say new credit policies are compared with the existing one to make the calculation of the answer. Let us understand how to do answer. I request all of you to write down answer along with me. In case of incremental approach, comma, the company will make a comparison of new policy with existing policy. Full stop. That is 60 days with 45 days, comma 75 days with 45 days in this example. Full stop. In the write down, step number one, in the write down, usually in this method, we will follow under mentioned steps. Step number one, total fixed cost. Step number two, variable cost to sales ratio. Step number three, incremental carrying cost. Step number four, incremental profit or loss. In this now write down, step number one, calculation of total fixed cost. In that write down, rupees 2 lakhs. 2 lakh rupees is as calculated above. Step number two, calculation of variable cost to sales ratio. In that it is again 60%. As calculated above. Step number three, calculation of incremental carrying cost. Now this is slightly a new step. I'll explain you that say how we are supposed to execute this step. In that, column number one will be average collection period. Let me explain you, do not write anything. Average collection period is column number one. Sales is column number two. Total cost is column number three. Carrying cost is column number four. And incremental carrying cost is the last column, and that is the answer. See, right now the credit period is 45 days. Sales is 10 lakhs. Total cost would be, friends, 10 lakhs into 0.6 plus 2 lakhs. That is an amount of 8 lakhs. In case of 60 days, how 60 is calculated? 45 plus 15. Sales would be 10 lakh 50,000 because it increases. Variable cost would be 630 plus 2, that comes to 8 lakh 30,000. In case of 75, sales would be 10 lakh 80,000. So variable cost 648 plus 2, that comes to 8 lakh 48,000. Now we'll make the calculation of the carrying cost the way we have calculated above. It is 8 lakhs divided by 360 into 45 into 20%. That comes to an amount of 20,000. In case of 60 days, it is 27667. And in case of 75 days, it is 35,333. Now friends, what we will do, understand carefully, we will make a comparison of the new carrying cost with the existing carrying cost. Means if at all we offer the credit period of 60 days, the carrying cost increases to 27667 from 20,000. So it increases by 7,667. In the second case, it increases to 35,333 from 20,000. So it increases by 15,333. So what is the amount by which the carrying cost increases? That is what we are calculating by making a comparison of the new over the existing. New over the existing. That is what we are doing. How this working is going to be helpful to us, that we are going to discuss in step number 4. Write down this step for the time being. So this is the way we make the computation of the incremental carrying cost. Now step number 4. Calculation of incremental profit or loss. Now friends, in case of the incremental profit or loss, we will be having some of the columns like this. Listen me carefully. Column number 1 will be particulars. Opposite to that, so there will be 2 columns. Average collection period 60 days and 75 days. 60 is like 45 plus 15 and 75 is 45 plus 30. So basically we make a comparison of new over existing. New over existing. What is the new policy? 60 days. And what is the existing one? 45. What is the new policy? 75. What is the existing? 45. That is the way we are making calculation. Sales. First of all, we are discussing the column of 60 days. I want you to write in the chat box that what would be the sales that we would write in case of 60 days column. Write answer in the chat box. So again, sales we can write an amount of 50,000. Simple. Why? Because it is an incremental approach. So we make a comparison of the new over the existing. We understand that so the sales of the company increases to 10,50,000 from 10 lakhs. So what is the amount by which the sales increases? It increases by 50,000 rupees. So again, sales we will write 50,000. I want you to write in the chat box that what amount you will mention in the against variable cost. What amount we will mention against variable cost? Against variable cost, we will write an amount of 30,000. Sir, why 30,000? Answer is extremely simple. Step number 2, we already have calculated. Variable cost is 60% of the revenue. We understand that so the sales increases by 50,000. So 50,000 into 60%. Variable cost will also increase by rupees 30,000. Yes. Again, I want you to write against, that is in the chat box. Let's say, what should I mention against the total fixed cost? Write answer in the chat box. Against total fixed cost, what amount should I write? So we understand that say against fixed cost will write 0. Why 0, sir? Because there is no change in the fixed cost. Earlier it was 2 lakhs. Right now also it is 2 lakhs. So there is no change in the fixed cost. So we are writing 0. You may have a doubt that, sir, then what is the need of doing step number 1? When you make us to calculate the total fixed cost? My dear friend, we compute the total fixed cost amount because we know that when we are making the computation of the carrying cost, at that time, so the fixed cost is required. That is the reason in step number 1, we make the calculation of the total fixed cost. So we understand that so the total fixed cost is like against that, so we will mention 0. Why? Because there is no change in the fixed cost. I want you to write answer that say what we will mention, what we will write against carrying cost.